Hey guys, many people are looking for some great ETFs that are paying monthly dividends, and a lot of these ETFs are covered call ETFs. Today we're going to be breaking down 5 of the best monthly paying dividend ETFs that are not JEPQ or QQQI. Hey guys, my name is Steve and I run the Frugal Expat website where we try to help people to save more and invest better. And today we're talking about 5 ETFs that pay monthly dividends and they also have no NAV erosion. Now today we're going to be talking about these. We're going to be breaking down some of the best ones on the market and some that you may not have heard of, and so that's good news to you. So stick to the end of the video, and I have one bonus ETF that deals with a little bit more of some interesting stuff like cryptocurrency. All right, let's get down to it. Our first ETF is going to be TSPY, which is a Tap Alpha SPYI Growth in Daily Income ETF. Now this ETF's got a yield of around 14%. It's got an expense ratio of 0.77%, which means it costs about $77 for every $10,000 invested. It was launched in August of 2024, and since its inception, it's had a total return of about 17.60%. So it's got a pretty good performance overall, and what it does is it's a little bit different than a lot of other cover call ETFs. Now this cover call ETF uses 0 date to expiration cover calls. So it's going to sell its cover call the day of that it expires. And then what it's going to do is going to close that option, and then it's going to collect the premium of that. So it's following the SPY, and so it's got a lot of cover calls going on, and it's creating income that is good for many people. Now this ETF is quite new. I mean, it's been around since August of 2024, and it's got a pretty unique strategy where it's selling cover calls on the day that expires. So it's allowing to see what's going on in the market, and so it's going to make those cover calls during the market day and then close them out and gain that premium. So that's just a little bit different than most of these other cover calls that probably do anywhere between at the money or out of the money, way out of the money, and selling a lot of their portfolio. So if you want to invest in this one could be a good one that you can invest in. It's got a good yield of approximately 14%. It's got a good total return of a little bit over 17% since its inception, and so it's a good one that you could buy and hold for your portfolio. All right, let's get on to our next ETF. Our next ETF is going to be GPIX, which is the Goldman Sachs S&P 500 Premium Income ETF. Now it's got an expense ratio of 0.29%, which means it costs about $29 for every $10,000 invested. Now this is a waived fee because it usually is 0.35%, but right now it's cheaper to help it out. Now it's got a yield of about 7.5 to 8%, which is okay. Now this was launched in October of 2023. Now it's got performance of about 17.06% since its inception. So it's a pretty good ETF. Now what this ETF does is it sells cover call options close to at the money. Now the perspective says it does anywhere between 25 to 75% of its portfolio, allowing about 25% to have not be capped of an upside. So it's trying to make a lot of premium at the money call options, and then it's allowing the rest of its portfolio to kind of advance if the bull market happens. Now if we're looking at what it's actually doing, it's probably selling about around 50% of its portfolio and allowing the rest of it to kind of have that upside. Our next ETF is going to be GPIQ, which is the Goldman Sachs Nasdaq 100 Premium Income ETF. Now it's very similar to GPIX, but it tracks the Nasdaq 100. It's got a yield of about 10%, which is a little bit more than GPIX. Now it's got an annual return of around 29.10% since its inception, so it's doing pretty good. Now this ETF sells just like GPIX about 25 to about 75% of its portfolio, selling cover calls at the money to get all that premium. Now with this ETF, you're probably getting about 50% of that selling and allowing the rest of it to kind of advance with the market. And so that's seen with price appreciation right now. Price appreciation year to date is sitting at about 5.5%, while the total return is sitting closer to about 23-24%. So that's good news for you guys. If you're looking for something to kind of get the Nasdaq 100 with income and price appreciation, GPIQ is a great ETF to buy and hold for the future. Hey guys, if you like this content, make sure to hit that like button, subscribe, and one of the best places I looked to look up all this information is Seeking Alpha. Right now, you can just take a look at Seeking Alpha. You can become a member and you can use the link in my description, but it's a great place where I look up all my information. It's a great place where I can get articles and seeing comparisons between different ETFs and different stocks. So if you want to have a piece of this Seeking Alpha adventure, I'll leave a link in my description. You can click on it, you can sign up, and you can take a part and learn more and more about ETFs and stocks. All right, let's get back to our video. Now, our next ETF is going to be SPYI, which is the NEO's S&P 500 Premium Income ETF. Now, this ETF is a lot like QQQI and is one of the first ones NEO's created. Now, it's got an expense ratio of 0.68%, which means it costs about $68 for every $10,000 invested. Now, this one's got a pretty good yield of around 12%, which is pretty good if you're asking me. It's a lot better than the Goldman Sachs ETFs and a little bit on par with TSPY. Now, in the past year, it's had a total return of about 16.22%. Now, this ETF, like I said, is a little bit older than QQQI. It was launched in August of 2022. So what it does is it sells covered call out of the money call options, which uses 1256 contracts, which allows it to have 60% of it being long-term capital gains and 40% being short-term capital gains. Now, what it does is it returns a lot of the capital back to the individual, meaning it's a lot better with taxes. And so what's happening is it's returning anywhere between 90 to 100% of its capital back to the investor, allowing them to not have as many capital gains on this investment, and it's also allowing them to kind of have their cost basis kind of go down. But what it's also doing is having a 12% yield. It's also having a great index that it tracks, as in the S&P 500. And so when the S&P 500 goes up, it's allowing it to have some of that good upside, allowing about 20%, 30% of its portfolio kind of getting some of that upside. Now, SPYI is one of the better ETFs on this list because it tracks the S&P 500. It's got great yield. It's got great performance. It's been around for a pretty good long time. And for the most part, we're talking about a cheaper expense ratio than TSPY. So if you're looking at possibly adding a good ETF that's not QQQI or TSPY, well, SPYI is a great one that you can buy and hold in your portfolio. Our next ETF is going to be QDOV, which is the Amplify CWP Growth and Income ETF. Now, this ETF has an expense ratio of 0.55%, which is one of the cheaper options on this list. Now, it's also one of the newer options on this list. It was launched in August of 2024, and this ETF has about a 12% yield. And since its inception, it has a total return of a little bit over 26%. Now, the reason I like this ETF, not just because a lot of commenters talked about it, but because I took a little research and I was like, man, this looks great. It is an actively managed ETF. What they do is they take about 20 to 40 different stocks from the Russell 1000 Growth Index. And what they're doing is they're creating a strategy where they can selectively choose which assets they want to write covered calls on. So you're getting a 12% return on an actively managed portfolio, which has got Nvidia, Amazon, Meta, Apple. It's got a bunch of those great Mag 7 companies. And this ETF is doing great in price return. Now, I took a look at price return for year to date. We're talking about something that's got about 8.89% price return year to date compared to the S&P 500, which is around 12%. So it's doing pretty good compared to the S&P 500. And it's beating out JEPQ, which has got a price return about 5.53%, and QQQI, which has got price return a little bit over 3.5%. Now, this ETF does have a total return that is beating all of those, and it's even beating QQQ. So it is a great ETF that you could buy and hold in your portfolio, and it's got one of the best performances, not only year to date, but also the 1 year performance as well. Now, this is a great ETF, but there are, of course, risks, and that means it's not always the safest. But that's part of having this ETF in your portfolio. I just talked about 5 different ETFs that you can buy and hold that have monthly dividends, no NAV erosion, and they're not JEPQ or QQQI. These are all great ETFs. Now, I said at the beginning of this video, I would have one bonus ETF that you could buy and hold and add to your portfolio. And this one's a little bit different. This one is BTCI, which is the NEO's Bitcoin High Income ETF. Now this ETF is a little bit different because, I mean, it's selling covered calls on those Bitcoin ETFs, it's selling covered calls on all these different Bitcoin things. So it's got a great yield of about 27%. It's got a high expense ratio of 0.98%. So that's $98 for every $10,000 invested. It's the highest on this list. Now it's got a great performance since its inception, which has been about 58%. So this is ETF that is growing price appreciation. It's growing with yield. It's got a lot of risk. I mean, it's doing all the covered calls on Bitcoin alone. And so that could be very scary for many people that are looking at buying this one. Now, if you like Bitcoin, this could be the one for you. If you don't, well, I have 5 others that I just talked about that could be the ETF for you. All right, so I just talked about 5 great ETFs plus BTCI. And these ETFs are great for monthly dividends. They give you some monthly dividends anywhere between 7 to about 14%. They give you a great price appreciation, so not that NAV decay as you've seen with some other covered call ETFs. They have a great assets under management, pretty good expense ratios, and it's a great way that you could add income into your portfolio. Now, if you don't want to do covered calls, well, then these ETFs make sense because they do it for you. They have management teams, and that's why you pay the expense ratio. So if you don't want to get into that complexity of selling covered calls and trying to make income off your portfolio, you can buy a great covered call ETF. Which one is my favorite? Well, I've talked a lot about JEPQ in the past, but as I looked at QDOV, it made me think, could this be a new great covered call ETF that you could buy and hold in your portfolio? Let me know in the comments, which is your favorite monthly dividend paying ETF that you are buying and holding today? And is there one I should talk about in my next video? Let me know in the comments, and I'll see you in our next video. Take care.